Good evening. My name is Nicholas Lewis, and this bank management group will be focusing on Jamaica National. The members of this group are Ramona Smith, Tanisha Lewis, Kevin Lee Wellington, and Neville Gale. We'll proceed to the objectives.
So our objectives for today includes provide an overview of Jamaica National Bank, overview of the financial performance of the company, identify key strategies outlined by JN Bank Management, review profitability analysis for JN Bank, identify key measures of risk of Jamaica National Bank, provide recommendations to improve JN's bank's risk and return profile. So the overview of Jamaica National Bank includes Jamaica National Group is a financial service company with over 14 years of history abroad and in Jamaica. Jamaica National Group was established on February 1st, 2017, and then after Jamaica National Bank was launched. Jamaica National Bank has 3 full years in operations. They have affiliate companies offering financial services such as JN Cayman, JN Small Business Loans, JN Money Services, and the list goes on. There are 8 board of directors and 11 executive body members. JN currently operates 35 branches and they provide a wide range of services, including, sorry about that, including checking account, mobile banking, online banking, bill payment services, and the list goes on. I'll now move on to my other group member.
Thank you, Ramona. Now, we're going to be looking at the overview of Jamaica National's financial performance. Now, in 2018, what was known as Jamaica National Building Society completed its transition to becoming Jamaica National Group Limited. And this transition saw the products and services that were usually offered by the Building Society being increased, which led to an increase in revenues. Jamaica National's main source of income moved from being just interest on deposits to also including interest on loans. The assets were increased from 213 billion to moving from 213 billion moving up from 208, and this increase had largely to do with the transition because they had to purchase more things to move into the different countries that they are now operating in. The income earned was increased by 17%, while interest on that very income decreased. In 2019, liabilities were also increased up from 176 billion to 179 billion. There was also a change in the net income, which was previously 977 billion. However, it fell to 813 billion, which is an approximately 17% change. There were also some amount of changes in equity that were seen in 2018 that weren't in 2019. I will now move on to the key strategies outlined by Jamaica National Bank.
Good afternoon. Key strategies that Jamaica Bank uses is that Jamaica National uses enhancing customer experience. They do this through the use of surveys, which are a key element of their accounting framework, which is conducted consistently to determine the levels of consumers and member satisfaction. To enhance their experience, JM Bank has implemented programs to improve the mortgage process and to boost its digital capabilities. Financial risk management. The bank management policies identify, assess, and measure the risk faced by the bank. set appropriate risk limits and controls, and monitor tasks and adherence to limits. The focus of financial risk management for the bank is ensuring that the bank has adequate economic capital and that the use of and proceeds from disposal of its financial assets are sufficient to fund the obligations arising from its deposit base and disposal of contractual liabilities. Credit risk grading. The bank uses internal credit risk grading that reflects its assessment of the creditworthiness of individual borrowers. The loan and borrower specific information is collected at this time of the application. Such information such as the age, tax debt ratio service, type of employment, net worth, and level of collateral for retail exposures are taken into consideration to this rating model. This is supplemented with extra data such as credit bureau scoring information on individual borrowers. In addition, the models enable expert judgment from the management to be fed into the final internal credit rating for each exposure. Community marketing. JA Bank has 27 branches across Jamaica in which the manager tailors each strategy to the needs of the community. By having managers identify the local community needs and customers, they will bank with the institution because they feel safe and comfortable, and the bank can attract a larger percentage on the target market. Flexible premium payments. JN Group contributes to the automotive sector in investing 563 million in motor vehicle loan financing. The bank offered premium insurance financing in which 3,200 of its members and customers benefited from the flexible premium payment options and motor insurance coverage. Integration of people and technology. JN Bank is exploring ways to improve the use of new systems such as smart ATMs, which they have in their business lines. Engaging with technology in a more focused manner, it has enabled JN Bank to spend more time on shaping the delivery of new products and services and allowed more time to interact with members and customers in a more meaningful way. I'll hand over to my next group member.
Profitability analysis.
Okay, so I'll begin with the return on assets. So the return on asset decreased as it was 0.49 in 2018 and 0.39 in 2019. So this decrease was due to a fall in both the net income and total assets, thus displaying that the company was not able to generate more profit, more net income from same thing from the assets within the company, resulting in decreased profitability. For the ROE, it decreased in 2019, and this decrease resulted from a fall in the net income and total equity, and this indicated that the company was not profitable over the 2-year period as it was not able to generate any income and profit and maintain the necessary capital strength. For the equity multiplier, the difference in 2019 indicates that the bank's assets are less financed by its capital, thereby requiring more debt to do so. The asset utilization, so there was an increase from 9.35% in 2018 to 96% in 2019. So this indicates that the bank was better able to generate more income from its assets in 2019. The expense ratio. So there was an increase from 9.20% to 9.48 over the 2018-2019 period. This was due to an increase in the operating expenses of the bank and indicates that more amounts of the bank's assets are being used to for admin and other operating expenses. Tanisha will continue.
Okay, so for the burden ratio, there I'm still doing
Could
the
you go
ratio.
back to the profitability?
Okay, so as it relates to the burden ratio, there was a 0.45 decrease in 2019. So this is actually a good sign for JN, as it indicates that the bank is performing better, whereas bank fees, service charges, and other income are being utilized better to cover non-interest expenses. So the net interest margin represents the difference between interest income that is generated by the bank and the amount of interest paid to depositors and interest holding liability owners. So there was an increase from 4.99 to 5.20 over the 2 years period. So this is also a good indicator, as it means that the company has a smaller volume of non-earning or low yielding assets. So the efficiency ratio decreased in 2019, moving from 98.16 in 2018 to 93.94 in 2019. So the decrease in 2019 is good for the bank, as it indicates that the bank is performing better compared to 2018. It tells us that the bank's income has increased in relation to its non-interest expenses. And finally, the tax ratio shows the amount of tax that is paid in relation to the overall net worth of the bank, So the lower tax ratio in 2019 indicates that the bank had paid less taxes in that year. So this also shows that the bank had lower returns, as the tax is calculated based on the amount of returns or profits for each year. And I'll hand over to the next person.
Okay, well, I'm Neville Gale. I'll be doing the key ratios for risk analysis by JN Bank. Okay, credit risks. The credit risk was reduced from 1.58% in 2018 to 1.52% to 2% in 2019, respectively. Well, what this shows is that the bank basically their conditions to meet resulting from borrowers' failure to repay loans and meet contractual obligations is decreasing. This means that JN is at good credit risk to whatever place they would like to borrow loans from, whether it be from the Federal Reserve or the money market. So, which is a good sign for JN Bank. They're performing well with their credit risk ratio. Liquidity risk. Now, liquidity risk has increased from 57.58% to 61.37% from 2018 to 2019. What this means that JN Bank has increased their potential to meet short-term financial obligations within the span of 30 days period. So if the bank should get in problem, they have increased their chances to pay off all the obligations without finding difficulties or without forfeiting their agreement, which that they signed with the Federal Reserve. The operational risk for 2018 was 96.99%, and it reduced to 89.03% for 2019. What this means that the day-to-day operations were for JN Bank were that errors by human errors, anything that disrupt the business operations, have reduced, even though this is still very high. For the bank, it's still very high for the bank. They are increasing the chances to correct all these errors between 2018 and 2019. Now we have the capital adequacy. This was reduced from 16.20% to 15.10% in 2018 to 2019. What this means now is how much capital the bank retains compared to the risk of using its assets. Now, even though there's a reduction under the Basel III Act, the minimum requirement is 8%. So the bank is still doing well in retaining as much capital they can as it relates to their risk-taking assets. And I will pass it on to the next presenter. Thank you.
Okay, so for the recommendations to improve risk and return profile. So to improve the risk and return profile, management should carefully assess the different risk management strategies that are expected to maximize their return and minimize risk and other operating costs. So even though it was mentioned that they don't really have a big problem with the credit risk, it is still recommended that banks try to at least minimize or lessen the amount of risk. Well, in terms of credit, seeing that it's one of the major risks for banks. Okay, so in 2019, mortgage loans accounted for over 90% of the total loans that were issued by JN. So the bank can attempt to reduce individual loan risk by decreasing loan-to-value ratio for the riskier properties. So this will decrease the loan amount as well as the risk to the bank while still acquiring interest on the loan. So other recommendations would include making improvements to existing risk management strategies to carefully screen potential customers and also to increase non-interest income. JN should provide a more effective strategy to manage the bank's inflow against outflows in order to assess the liquidity risk and ensure that there is not too much or too little cash or cash assets available that will come at a cost to the bank. So the bank should also make a better attempt to monitor and control its daily activities to decrease operational risk. To improve the risk and return profile, it is recommended that the Jamaica National Bank identify different ways to increase capital adequacy, as the 0.14 decrease in 2019 signifies that the bank can only absorb minimal losses as compared to 2018. And that is the end of our presentation. Oh, and